Good day, fellow investors. In line with Jill's question, Kering and Burberry, is this the best time in the last decade to buy those stocks? Because if we look at the stock price, which is the key function for risk when it comes to investing, it is much better to buy now at 235 than here at 782. This is a huge difference when it comes to investing. Everything looks better. P ratio, dividend yield is much higher, but I would get practically a few emails a day in this period about Kering because everyone likes stocks that go up. Now that it looks terrible, this is the first comment about Kering I got maybe this year. That is how the market works. And also Burberry, when it was going up, luxury, everything, boom, boom, boom. Now we have to take a look. So, for those who don't know, Kering, Yves Saint Laurent, Gucci, Balenciaga, Bottega Veneta, etc. Of course, it's Balenciaga, but I like Balenciaga better. Let's look at the presentation. It should be the most luxurious presentation we ever look as investor, and well, it starts okay, no? We look at the revenue and you can see what's going on. 15% down in the last reported quarter, all down across the board. We can clearly say that the segment, the luxury segment, is going through a tough period. But this is completely normal when it comes to the fashion business. And we'll see later, we'll discuss a fashion cycle that is very important to know when it comes to investing in such luxury fashion companies. Because now the sentiment is down and sales are still there, but sales are down with all these segments that have been racked up over time. And they are working on their strategy. They expect EBIT around 2.5 billion. They have some debt that's, let's say, price to cash flow profits is around 10-15, and they want to build healthy, sustainable top line growth. EBIT 2.5 billion market cap, so we are still around 15 from that perspective. But this is what I want to show you and discuss. So .com 2002, then we went down, then housing bubble, then we went down, then there was this small boom, China down again, 2019, boom, down and boom, and now we are going down again. And look at how the stock price follows the revenues and the booms across the cycle. So you can really watch that. Maybe there were some divestments, etc. But it is a very, very hard fashion cycle to follow. But we have to understand that when there is exuberance in the markets, when there is a lot of money, then the luxury boom happens. And people want to show how smart they are, how much money they have made, even if it's just the Fed printing. Therefore, when the cycle reverts, when people are a little bit more cautious, everything reverts and reverts to more normality. But when I look at Kering, the only certainty whenever it comes to investing in a business is the debt you rack up. That's the only certainty that you have when it is about doing business. And we had around 3-4 billion of long-term debt, and now we are at 11 billion. I don't know what they did with the money, but they did some repurchases, not much. However, that will weigh also on net income as interest expense went from below 100 to 500 million, and the debt is now there. So net income 2 billion, P ratio 15, as I said. And when the growth stops, net income down, valuation contraction, and then you have a double whammy that explains the minus 70% that Kering stock is showing. The P ratio went from 43 to 12 as the growth reverted. And now we are here. The key question, of course, is Kering a buy now? Well, if they return to growth, if there is another boom, exuberance, then Kering is a clear buy and everything will double from here at least. if the segment and the sentiment continues to remain negative, if we have slower than expected exuberance in the world, if not everyone is making money, because everything trickles down, the fast money made on Bitcoin, on this, on that, on left, on right, is going into purses because that's in line with the fast money spending fast, and then when it dries up, it dries up. So we have to watch for another environment rebound to see when are these things going to rebound again. We have to watch the economy. If there is a slowdown in the economy, then this might be a prolonged situation, as we have seen after the dot-com bubble. It took 15 years to rebound, and then you even don't know whether it will rebound, which brands will rebound, what will be cool, what will not be cool. So it is very hard to invest in fashion as a retail investor. You never know. The conclusion is yes, if you look at the stock prices, these are the best times to buy ever. But there is always this but of the fashion cycle, and there are the brands. Burberry says there will be no profits this year. Likely, if the trend continues, the same will be there for Kering. There is big unknowns. Do we have a margin of safety? There is 11 billion of debt. So we don't know what the economy will look like. I think that these kind of things are to be watched for the next printing cycle. When everyone starts again with stimuli, we have seen China doing it now. If there is a slowdown in Europe and Europe gets, there will be booms again. I prefer other things, and I find it hard to put my money into fashion, but if you understand fashion better than me, as 99% of people does, then you can watch it. Look for exuberance, financial exuberance in the markets, money printing, stimulus that racks up that profits into factories, because when the Chinese owner of the factory makes profits, then the rest of the family spends and shows off the money. So follow that cycle. If the Chinese stimulus works over the next 2 years, as it might, because it takes time to work, not just the rally, really check the fundamentals, then these things might boom. You might even catch first the Asian boom and then followed by the Kering boom. Hope I have helped a little bit. Watch the cycle. Thanks for watching. I'll see you in the next video.